Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Victor Adair, co-founder of the Polar Futures Group. He's Senior Vice President and Derivatives Portfolio Manager at PI Financial in Vancouver. His website, PolarFuturesGroup.com. Welcome back to the show, Victor.
Jim, thank you for having me back.
Victor, I don't know if people are running to panic stations today, but when you look at the big boards, they're bleeding red and bleeding deep. Is panic a time for you to take advantage of what others may be doing that may not be the wisest thing to do?
The short answer is sometimes. And sometimes, one of my things is if you're going to panic, panic early. So, you don't want to panic late. And sometimes, you need to do that too. So, I'll tell you what, you say that, the market just seems a little more fragile to me lately. I mean, why wouldn't it be? You see some of the chop we've had, market, rallies hard, falls hard, rallies hard. And by hard, I mean, these days it seems to have they use the Dow Jones for a barometer to swing through several hundred points is not a big deal. So yeah, I think there's some panic and some of that in the markets, and sometimes I trade it. This week, I'll tell you what, I'm on a quiet little spot on the Gulf Islands, between Vancouver and Victoria, and I'm not paying a lot of attention to the markets. One of the reasons I can do that is because I know the markets are going to be open again next week. So if I miss something this week, believe me, there'll be things to do next week.
Right, and of course, when the numbers get big enough, they'll go and put this on the local and national news. And I always find that if you've been following business reports and business news, something like this isn't shocking, but to the general public it is. And what does that mean to finances and what people do?
I tell you what, I rarely watch television. I was saying to a buddy that I'm visiting with here who's been, made a fortune trading his own money over the years. And, I was saying to him, I don't want to hear their opinions. There's a lot of folks out there that'll be offering opinions that I just don't want to hear them. So, I don't pay much attention to that. Yes, the public seems to panic late, but, that's how it is.
Well, gold has rallied over $200 since the end of May, and lately we've seen some huge intraday price swings. What are your thoughts on gold?
Oh, okay, sure. Well, maybe going back to a little bit of what you were just saying, I think the public is very aware of what's going on in gold. There has been a massive move in the participation by speculators in the gold futures markets. I mean, we're at as big a position speculatively long as we've ever had in gold. So, let's say the world has shrunk in terms of news. News gets out pretty fast. People have seen this. I think the fast move up in gold could come from a few things. On the one hand, it's clearly a safe haven bid. There's a lot of things to be nervous about. I just used the word fragile moments ago. But gold over time has often been the flip side of the U.S. dollar. The U.S. dollar is weak, gold goes up. This time the move in gold, at least over the past couple of months, let's say since the end of May, the gold has moved way more than will be justified by any weakness in the U.S. dollar. We can get into currencies in a few minutes. But I think this time around it's more of a safe haven bid, and it's also because interest rates are so low everywhere. It used to be that if you're buying gold, didn't pay any interest and you're tying up capital, so if it didn't go up, you had an opportunity cost and so on and so on. Well, with 6 billion or 6 trillion, I should say, dollars worth of negative yielding bonds around the world, people aren't giving up any interest. You know, you're positive to buy gold. So the gold has had this big move. Then, like yesterday, we dropped $60 in about a half an hour when the news hit the market of that, you know, Trump was considering or planning now to not put this extra 10% tariffs on some items. And that, again, was an indication to me of how fragile markets are, including the gold market here. So we have gold, I think it's trading at an all-time high in about 70 different currencies around the world. So yeah, it's a recognized bull market. What are my thoughts here? I guess I don't know. I think the gold market could, because of this massive influx of speculative buyers, I think we're going to see it much choppier up and down than what we're used to the past 5 years.
We'll have more with Victor Adair right after this.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Victor Adair. Victor, your latest blog post says that long bonds are the most crowded trade in the world. You think the huge rally we've seen in the bond market may be ending, and that will affect all markets. What's the story there?
Okay, the most crowded trade in the world. I think that we've seen here over the past couple of years massive flows into different kinds of bond funds. And we've seen the prices on bonds run to the upside, yields going down. I just mentioned something in the neighborhood of $16 trillion worth of bonds with negative yields. We've got inverted yield curves. A lot of things, these things are signs of, let's say, you can read stories of people would say the bond market is telling us that there is a recession coming. You know, the bond market is telling us that the central banks are going to have to keep cutting interest rates. The bond market is way smarter than the stock market. You see these sort of stories out there. But I just look at this, and by the way, a lot of those stories could very well be right. Maybe are right. But what I'm seeing is the bond move has just been almost like this parabolic move to the upside. Almost like there's been a stampede by people to want to get into this market. And, you know, oftentimes when a market ends, it'll end in like a crescendo, run to the upside like that or the downside. And I'm just noticing that that's going on. Let me give you an example as to how different the bond market is. Last year, both Austria and Argentina issued what we call century bonds. These were bonds that are going to take your money and give it back to you 100 years from now. I mean, who's alive 100 years from now? But anyway, the Austrian bonds have about doubled in price. Okay, you paid $1 for them; they're now worth just about $2. The Argentinian bonds, you paid $1 for them; they're now worth about 25 cents. And you know, I remember when the Argentinian bond came out, I thought, why would anybody ever lend money to Argentina? I mean, they are serial defaulters ever since they had paper money down there. So, you know, all bonds are not created equal. That would be the thing. We talk about quality spreads. We all know that there's been a lot of debt issued by corporates, and some of those people may be in trouble when it comes to paying back money. I think one of the most interesting stories I've seen recently on bonds was that Germany is considering, now that their 10-year bond has got a negative 65 basis point yield on it, they're thinking of issuing some bonds to fund some environmental programs. I'm seeing this as a politically correct way for Germany to kind of slowly back into issuing debt to fund some fiscal programs. And I think we'll see more of that. So the supply shortage that's been in the bond market, I think, is going to change.
Well, first of all, I always wondered, why would you get a bond that gives you less money than you put in? I don't understand the mental aspect of that.
Well, maybe the mental aspect is just as simple as if you can buy something and you firmly believe you can sell it at a higher price, what do you care what you're paying for? And, you know, when we look at yields, of course, they're the inverse of price, but that's the thing. The European Central Bank is thought to be going to buy all the bonds that are out there. So if you can buy a bond, you can be able to sell it to them for a profit later. That may be it. That's pretty cynical as a trader, but that's how I see it. Try to justify in a rational world why you're going to lend money to somebody and be happy to do it and know that you're going to get less money back. Doesn't make any sense.
Yeah, I mean, in 5 or 10,000 years of human financial activity, negative interest rates just appeared on our doorstep. If it was such a good idea, why wasn't it done by the ancient Egyptians or people in India?
But I don't have an answer for that.
Well, exactly, because it probably doesn't work. Because, I mean, if negative interest rates were the answer to problems, then how come Europe's economy is doing poorly and Japan hasn't recovered from its successes of the late 80s?
Again, I don't have an answer for that.
Exactly. We'll have more with Victor Adair right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Victor Adair. Victor, you've been bullish on the U.S. dollar in most of our interviews. Do you still feel the same way?
Yes, short answer. And I said earlier, we'll get to currencies. So I want to say currencies aren't monolithic. And here's what I mean by that. The U.S. dollar has actually been weakening, certainly the past couple of weeks, maybe even past couple of months, against the Japanese yen. It's been kind of a steady against the euro. The commodity dollars, as we call them, Australia, Canada, New Zealand, maybe Norway to some degree, have been falling against the U.S. dollar. And then emerging market currencies, certainly Argentina is the bellwether on this, or pardon me, the poster child. But emerging market currencies have been clobbered relative to the U.S. dollar. So when we're saying the U.S. dollar, it's like against what? When we live here in Canada, we almost always think of it against the Canadian dollar. But out in the world of trading foreign exchange, the U.S. dollar, you trade against a number of things. I think the U.S. dollar will or could be or has been in the past bought if the markets get worried. So the U.S. dollar is a safe haven. It seems that the first safe haven is Japanese yen, Swiss franc, that sort of thing. And the Japanese yen, I think as much as anything, is Japanese people pulling money back home that they've had invested around the world. And by taking the money back home, that helps boost the value of the yen. And of course, then the speculators know that that's going to happen and they'll front run that. So that's why that the yen will catch a safe haven bid. There's an interesting thought about Donald Trump. And we read, that he complains about the U.S. dollar being too high, that other countries, are manipulating their currency down. The most recent example is him, screaming about the Chinese RMB. I saw a very interesting thought piece from, I think it's Brent, at what's his last name? At San Diego Capital, anyway, in San Francisco. And he's saying, wait till Donald Trump figures out that a strong U.S. dollar actually gives him more leverage when dealing with a lot of countries around the world. Then, away we go. I know he's been very bullish the U.S. dollar. Other people have different and sometimes very complicated theories about why the U.S. dollar should be stronger. I'm a pretty simple country boy. I just like to buy things that are going up, and if the U.S. dollar has been sort of sideways in terms of not having a major move the past few months, but I'm probably going to be inclined to be a buyer of the U.S. dollar.
You've often said the Canadian dollar is the flip side of the U.S. buck. What's your thoughts on the loonie?
Yeah, like as I just said, if we're in Canada and we're thinking about the U.S. dollar, we're always thinking in terms of the Canada-U.S. exchange rate. But really, of the main things that kind of drive the value of the Canadian dollar, the relative strength or weakness of the U.S. dollar against all currencies is pretty much at the top of the list. It's difficult or unusual, and unusual things happen, for the U.S. dollar and the Canadian dollar to both be going up at the same time. Certainly that can happen, but if the U.S. dollar is weak, probably Canada is getting a bid. The other thing is the interest rate differential. If interest rates are much higher in one country or the other, that currency is probably doing better. And certainly the last few years, America has got a premium over Canada, and as that premium gets smaller or bigger, it'll affect the exchange rate. And then there's commodities, and especially crude oil. And there's another thing that comes into play from time to time, and that is when the U.S. stock market is weak, Canada seems to be weak as well. So I have had a view, well, let's say it this way. We remember here a few years back the Canadian dollar was around par. I'm going to tell you that in our lifetime that was unusual. For the Canadian to be up around par with the U.S. dollar was an unusual event for the past 30 years. So I have generally had a negative view on the Canadian dollar. I'm proud to be a Canadian, happy to live here and all that, but in terms of trading, I usually will be looking to trade the Canada from the short side. Now, in the very short term, we had the Canadian dollar rally over the last month or so. We've seen a big swing in the speculators in the Chicago futures markets, gone from being net short Canada for the last year and a half or so. They're now a little long of Canada, and I think they're underwater on those trades. I think part of the reason they were doing that, they expected that our interest rates here were going to remain pretty steady because the Canadian economy was stronger than the American economy, and the Bank of Canada wasn't going to cut rates even if the Fed did. Okay? That was kind of the quick theory. I think that we're seeing that theory is going to unravel a bit, and I think people that bought into the Canadian dollar on that idea are going to be throwing in the towel. So I see a lower Canada ahead.
Key global markets had a great rally from last December's lows, and they've had some sharp corrections along the way. How are you trading those markets?
The stock markets, here's, I think, the difference. We've gone broadly sideways for the last 18 months in the major American indices. Just look at that. And as opposed to, we've been in a overall bullish trend for the last 10 years. I kind of would think the markets would continue to have kind of a choppy, sideways kind of action. I mean, when you got a day like today, we're down 700-800 points or something on the Dow, you say, well, that's hardly sideways. Well, actually, in the scheme of things, yes, it still is. So I would be, I'm thinking that it's going to be more of a trader's market at best, as opposed to a buy and hold market. Let's say that. That's the way I'm looking at it. An example of something I did last week. We had stocks fell hard Monday of last week. Tuesday was a bit of a bounce back day. Sold off some more on Wednesday. And the other thing that was going on was volatility, as we trade vol in the market, was really ramping up. So I was able to do a trade where I sold out of the money puts, trading in an extremely high volatility, and short-dated ones as well. And as the market rallied, the premium on those puts that I was short just shrunk. So that's kind of the way I'd be looking to trade the markets, as opposed to just buy them and hold them and, understand or believe that, they've got nowhere to go but up.
Are people giving tweets from the president too much credit for what happens or doesn't happen in the markets? Would a lot of these things still have happened no matter what he said or didn't say?
Yeah, I understand, why you asked that question, but, no, he's a new wild card. I mean, we never had presidents do that before. We never had a president like Trump before. When he comes out and, announces just like out of the blue that they're going to put 10% on another $300 billion worth of, imports from China, yeah, that rips the market. And then when they release a story that actually maybe they're going to delay doing that or this or that, or, when he's taking when he's barking at Chairman Powell at the Federal Reserve, yeah, Trump, he definitely moves the market. And maybe he gets a kick out of that. He's that kind of a guy, I guess, that would get a kick out of being able to move the markets.
The crude oil market's had some wild price springs over the past year. What do you think's been happening, and what do you see happening now?
Yeah, crude's really a supply-demand story in the sense of, when there's thoughts of a supply shortage, that's bullish news. Of course it is, but I mean, what supply shortages are, OPEC is going to cut production, or OPEC and friends, as I call it, they're going to cut production. There's trouble in the Strait of Hormuz. In other words, the Iranians or grab a ship or something like that. When inventories in the United States are reporting a big draw, sanctions on Iran, there's another one. How about Venezuela, having declining production, or the Americans aren't going to buy any more of the production, and so on. So these are supply shortage stories, bullish news. On the other side, the bearish news is call it a demand shortage, where maybe we got a slowing global economy and people are going to need less crude. I mean, it's a market where the price is getting discovered at the extreme margin, up or down, 1 million or 2 barrels a day in terms of supply demand. And also on the supply side, I mean, we've had a game changer, a huge game changer, where the Americans have increased their production so much that, maybe they're the largest producer in the world, certainly a major player. That's changed. So I think crude kind of jerks up and down on these changes in perceptions of supply demand. And then, of course, throw in the odd geopolitical scare, and that just adds to it. I don't think that's going away, is what I'm saying. I think we're just going to have more of this choppy price action.
Do you think it's priced in? I mean, there used to be a time just a few years ago, if somebody seized an oil tanker in the Middle East, there'd be panic on the crude market. Now, with the U.S. being self-sufficient and exporting, there just doesn't seem to be the need to panic. Plus, Canada's got excess supply. If we need to tap into that, we can get it. Do you think because of the supply situation, these so-called crises just don't mean what they used to?
Okay, I think there was some sort of an anti-war song back in the 70s, just pops into my mind, that I think the slogan was, what if we gave a war and nobody came? If nobody's got a position in the market, then you could have something that's a panic happen, but there'd be no price movement. Where the risk is, and I keep talking about this, I call it positioning risk. When everybody and his dog has been buying and buying and buying a market that's been going up and up and up, and more people buy it because it's been going up, and all of a sudden it gets hit with some bad news, that market is extra vulnerable to bad news because of how everybody is positioned. So, I don't think we're going to run out of opportunities to witness dramatic price action in the market because of a panic, because of how everybody, or how markets are positioned. That's just not going to change.
Victor, you've been trading futures and options for almost half a century, 45 years. You're still trading. What's the biggest advice you can give people who want to be successful traders?
I keep coming back to this, and that is you got to be prepared to be wrong. Over that career, I was a broker for most of that career. I had brokers working with me, for me, that sort of thing as well. I've just seen all kinds of people just lose a hell of a lot of money. And if there was one thing in common to what caused them to lose that money, is they would not be prepared to be wrong. And what does prepared to be wrong means? Okay, on the one hand, it means you're going to buy a market But you say, geez, this could go up and it could go down. So if it goes down, what's my contingency plan? Okay, could be that. But it's also things like sizing. I think for me, I always trade with stops. If I buy something, I have an order in the market to sell it if it gets to a certain price. Now that may, in my mind, it's just a contingency. That's in case something happens when I'm not paying attention. You know, I'm going to be taken out of the market instead of coming to look at my screen and go, oh my God, I can't believe what happened. So I always use stops that don't need to get taken out on a stop, but it's there sort of as a sale of last resort. Concentration risk. I mean, if you've got positions where you're long, say the euro, you're long Swiss franc, you're long British pounds, you're long Japanese yen, you're long the Swedish krona, you're long the Canadian dollar, all of those positions you're short U.S. dollar. So you've actually not got any diversification at all. You are concentrated on something, so you got to watch concentration. You know, you've got to find your own way to participate in the market. I keep saying this, you know, write down why you're doing something. There's nothing that I can think of that is better advice than that, to write down why you're doing something, write down how you felt about this or that, and, you know, write down why you'll get out of a position if you've got it on, and then stick to it. Like, have a process is the thing. You got to understand, it's not a game of perfect. You never catch everything. You don't get in at the bottom and out at the top, and you got to forgive yourself if you miss trades or you make mistakes. So, and then, like I said at the top of the show, you need to remember that the markets will be open again next week. So, you know, the world doesn't stand or fall on what you do today. And if you're trading in the way that it does, then, you know, sooner or later you're going to blow up.
Victor, thank you so much for being on the show.
Jim, thank you for having me. It's always fun.
My guest has been Victor Adair, co-founder of the Polar Futures Group. He's Senior Vice President and Derivatives Portfolio Manager at PI Financial in Vancouver. His website, polarfuturesgroup.com. If you've got any questions for Victor or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet. Our YouTube channel is Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.